Global financial markets are experiencing significant volatility right now, and it's natural to feel nervous during times of market and economic uncertainty. We know this unprecedented period doesn't come with a clear set of instructions, and we're here to help. First, let's start with some perspective. The stock market trend, as measured by the S&P 500, is up. The S&P 500 is a stock market index that measures the stock performance of 500 large companies listed on stock exchanges in the United States. The S&P has been on an upward trend since 1926 and has only dropped by 50% a total of 3 times in the past century, and each time it has, the markets have rebounded over time. In many ways, being a long-term investor in the stock market is like playing with a yo-yo while walking up a flight of stairs. You may experience highs and lows in the short term, but you're following a steady upward path over the long term. If you're a long-term investor with Members Trust Company, you should know that we've prepared for days like these. We hold investment-grade Treasury securities in our portfolios because we know that when stock prices go down, the value of Treasuries tend to go up. So, as a long-term investor, you're presented with a unique opportunity to sell Treasury securities for more than they were worth yesterday, and then use that money to buy up equities while they're on sale. This way, you're poised to ride the market on the way back up the stairs. A downturn may also be a smart time to consider tax loss harvesting. If you hold securities that have lost value in a taxable account, you can sell these securities to realize your capital losses. You can then use those losses to offset capital gains in the future. You can also invest the proceeds in similar securities, so that you can be sure to ride the market on the way back up the stairs. Market volatility is inevitable, but panicking can be a costly mistake. Selling stock when prices are low and buying it back after prices have gone up simply doesn't make sense, especially for long-term investors. In fact, missing even just a few of the best days of returns can deal a significant blow to your portfolio's performance. History has shown us that after periods of volatility, the stock market not only recovers, but moves on to reach new heights. Let's consider your alternatives. If you were to sell your stock during a decline and use those funds to buy bonds, you would be giving up a dividend yield that, while temporarily low given the current state of affairs, is still higher than the interest rate on a 30-year bond. If you are a long-term investor with Members Trust Company, the wisest move you can make is to make no move at all. Stay focused on your long-term financial goals and rest assured that we're doing everything we can to make the most of the situation. We are here for you, now and always. If you have any questions, contact Members Trust Company to speak directly with your portfolio manager. 888-727-9191. There's a reason trust is our middle name.